Hello everyone, welcome to our channel Cryptoknowlogy. So, cryptocurrency market debt. In this video, I will give you the answer of this question. A 1 trillion market cap was eliminated from cryptocurrency market in the most recent sell-off, which dealt investors a devastating blow. Major cryptocurrencies, including giants like Bitcoin and Ethereum, suffered such severe losses that they lost up to half of their value from the peak, while minor altcoins suffered much more. The key causes of the crypto meltdown appear to have been the sudden sell-off by investors amid increased inflation fears and the suspension of withdrawals by cryptocurrency loan company Celsius. Investors' continuing avoidance of riskier assets is having an impact on the stock market also. The largest and most well-known cryptocurrency, Bitcoin, dropped below the 20,000 mark, which practically all altcoins starting with Ethereum suffered losses. The steep decrease in cryptocurrency prices is the opinion of experts indicates that investors' appetite for risk is diminishing. They are obviously afraid of risky investments. Cryptocurrency is one of the most volatile financial tools due to all of its uncertainty and volatility. Now, everything depends on how you ask the question, is cryptocurrency market debt? Are you an investor seeking a 10x return on a speculative coin with no real world applications? Are you purchasing an art NFT with the hopes that a famous person will purchase their own piece from the same collection? If so, the debt inquiry is likely to have a yes response. The market collapse is causing cryptocurrency to surrender, and the likelihood that something like 2021 will occur again is not very great. The pandemic had produced incredible favorable macroeconomic conditions. Prices were already rising. More investors than ever were active in the market, and the most significantly, there were no rules. Almost all nations now regulate cryptocurrency, especially the US. Particularly in the wake of the crash, the US Securities and Exchange Commission is severely cracking down on projects. Cryptocurrency investing is not entirely extinct. However, it is unquestionably far less advantageous for individuals who are exclusively focused on speculative investing and the possibility of making huge profits. For an asset to be sold, there must be a seller who does not want the thing due to the risks and disadvantages attached to it. The buyer must think the risks outweigh the potential advantages in order to make a purchase. The core of all capital market is that. It's especially that cryptocurrencies seem to be garnering a lot of media attention right now. Now we will talk about the projects keep innovating despite market crash. And as investors scroll down the list of best cryptocurrencies, they will see that each project had a high goal in mind, one that never expressively included price growth. Layer 1 initiates with a similar focus on dApps to Ethereum include Cardano, Solana, Polkadot. Tether, Binance USD and USD coin are stable coins that are unable to grow. The list continues. So following this current crash, is crypto debt? No, not for the perspective of innovation. Since these enterprises ultimately concentrate on more expensive visions, they are not affected by market stability. And switching from equities to cryptocurrency, investors sometimes fall into the trap of thinking that coin producers are just as concerned with stock prices, shareholders as traditional businesses are. This is not true. In fact, projects frequently restrict discussing price speculation on official channels. Ever since the crypto meltdown, developers have continued to innovate. Investors continue to observe several significant enhancements and rollouts. Cardano will shortly follow with its own hard fork, while Ethereum has undergone its greatest upgrade ever, the merge. Additionally, people are and banks collaborating closely to implement a new global banking communication standard. So next is crypto. It is made for transactions, not gains. Anonymous coder, that is Satoshi Nakamoto, who created Bitcoin in 2008, probably had no idea that it would one day reach the heights of the cryptocurrency bull market. But Bitcoin was never intended to be this way. A slight increase in the price of BTC was anticipated, although that was initially only supposed to come from the expansion of its real-world applications. BTC was primarily created as an unbanked population means of transaction. With Bitcoin, consumers can transact without being subject to the authority of centralized financial institutions. Yes, there are more cryptocurrency like this besides Bitcoin. Even though it was created as a joke, Dogecoin serves the same purpose. The same thing is by privacy coins like Monero, Zcash, or we call it as Zcash. The additional aim of making these transactions fully anonymous. The second largest cryptocurrency, Ethereum, which experienced its own price resurrection last year, had a different goal in mind. However, ETH is also not completely focused on profits. The goal, when Vitalik and other 7 Ethereum co-founders started the project, was to create a blockchain with an integrated programming language. In contrast to the current World Wide Web, this led to the creation of an ecosystem of decentralized apps that is known as dApps, which may be immutable and perform better. This is the end of our video. If you want to know more about cryptocurrency, you can visit our website cryptoknowlogy.com. Link in description. Thanks for watching. Kindly subscribe our channel.